Hello, on the screen is Hindalco Industries Limited Quarter 1 Fiscal Year 2026, the earnings conference call or the basically the con call. A lot of important things were said on this con call by the management of the company. A lot of guidance was given, that is targets. And let's read. So, first we move to page 4 of this con call. All right, page 4. Here, this is said by the management on Novelis. Novelis is Hindalco's international business, where basically they get aluminium scraps, used up aluminium, and they convert it into flat roll products. Like the aluminium, it's converted into a sheet, aluminium sheet, then that can be converted into like a tube, flat roll thing. It's rolled basically. The Novelis is their international business about that. So management says while Novelis's adjusted EBITDA in this quarter was impacted by higher aluminium scrap prices, used up aluminium, so aluminium scrap prices, and tariffs, strong beverage packaging demand, improving scrap spreads, and accelerated cost reduction benefits to flow through the second half of fiscal year 2026 will help address the impact of tariffs and hence improve margins. So, to address the impact of tariffs on, that is, Novelis, and improve margins, what things will happen? First, strong beverage packaging demand in North America, especially. Beverage packaging, a lot of this rolled aluminium is used in beverage packaging. Then improved scrap spreads. Scrap spreads. Spreads the difference in the cost of production and the price which is it sold at. So improving scrap spreads, that is the price at which it is sold, and the cost is going to be a difference, higher difference between them. So better margins, more profits per scrap, and accelerated cost reduction benefits. So they're currently investing a lot of money on cost reduction programs to improve efficiency and to reduce costs. So this was that. Then down below, again, this is said by management of the company. He says, we have completed the first round of organizational design, footprint optimization, and process improvements, and are on track to exceed over $100 million of cost savings target for this year. All our expansion projects, including, very important, the Novelis Bay Minute project, are progressing well as planned. So, this is all the cost reduction programs. The benefits, they believe they are on track to exceed over $100 million worth of savings for this year, basically. All the expansion projects are on track, including the biggest one, that is the Novelis Bay Minute project. Then, the next statement is on the aluminium upstream performance. So, Hindalco has an aluminium upstream. Aluminium upstream is basically, digging out the aluminium, and they had a very good quarter for aluminium stream segment. So here's that. EBITDA margins for aluminium stream, that is, digging out the aluminium and all that. EBITDA margins were at 44% this quarter and continue to be the best in the industry. So the EBITDA margins of aluminium stream were 44% this quarter, that is quarter one fiscal year 2026, and they are the best in the industry. Uh, yes. Then moving on, we have questions. Yep. We have questions by analysts and shareholders and then answers. Now, the question is, and I read, so on the downstream aluminium business, you have posted a strong margin yet again, $264 a ton. So, just want to understand what is driving that, and also with the FRP, flat rolled products. The sheet is being rolled. Aluminium sheets are being rolled into products to have a specific shape. What can we expect the margin to be in the coming quarter and year? All right. So here he mentions downstream aluminium business. Now, upstream, we discussed upstream aluminum is digging the aluminum out of the ore, the mining stuff. Downstream, like, okay, downstream is that you take that aluminum, right? And you convert it into products. Like you convert it into different shapes, like that of a rod, or that of a, what you can say, like a can shape, like a beer can or a Coca-Cola can. Convert aluminum to that shape. That is a downstream business, converting the aluminum sheets into specific shapes and then selling them. So he's asking, they have posted a very strong margin at only $264 a ton. I believe that is the prices. The price of aluminum business is $264 a ton for downstream. So like flat rolled products and all that. He just wants to understand what is driving the margin even at this low $264 a ton price of, I guess, aluminum. Now, answer. So what is driving the downstream EBITDA improvement is we are moving up the value chain. Important, very important. They're moving up the value chain. So instead of just selling extrusions, we are now selling battery enclosures to EV manufacturers. What does this mean? Okay, first they said instead of just selling extrusions, in very simply, it means aluminium is being converted into a specific shape, right? Aluminium may be converted into a square or into a 3D rectangular shape. It can be converted into a cylinder shape. So just converting them to that specific shape and selling them. That converting to specific shape, that's extrusions. That's it. But now they are selling battery enclosures to EV manufacturers. So that gives us a margin on the extrusion as well as a further margin on the end product, which is fabricated. What is the end product that is fabricated? Battery enclosures. So they are selling battery enclosures to EV manufacturers, and that is more high margin. That is improving the EBITDA. Reading further. So we have a number of examples like that where we have started to move up the value chain and hence the EBITDA per ton is increasing. All right. Reading further, he continues to say the management that is now the other point to note is that we're roughly shipping around 100 kilotons of the aluminium downstream in India. Then, when the FRP, flat rolled products, 2A comes in, 2 can refer to like a specific plant, specific factory or capacity, new capacity comes in, it's fully operational, and the Silvassa plant reaches capacity, we should be shipping 150 kilotons because our capacity then goes to 600 kilotons. So over the next few quarters, we are going to steadily see the volumes going up and EBITDA per ton improving. All right, all right. Basically says that the FRP, flat roll products 2A, that's a new plant being fully operational, and the Silvassa plant reaches capacity. So Silvassa plant and FRP2A, these two new things come in. It will improve their aluminium downstream capacity to 600 kilotons. And because of this increased capacity, they will ship more and more aluminium to these places. And of course, as downstream aluminium margins are expected to improve, EBITDA per ton is expected to improve. They will have more EBITDA and more profit margins from aluminium downstream. They're expecting. This is a kind of a guidance. The analyst then asked a small question. So in that case, can we expect a $300 plus number kind of coming through sometime by the end of this year or next year? A $300 per ton price of product, he's asking. And the management just replies that they think it will be somewhere between $250 and $300. Currently, it's $264 per ton. So he's expecting around that range only, 250, 300, maybe not plus 300. Now, another question asked by analyst is, or shareholder is here. So, on the aluminium COP, that is cost of production, can you give a guidance for quarter one? No, quarter two. And like, how was it for quarter one? So aluminum cost of production, how was it for quarter one? And how will it be for quarter two? Aluminium, again, I guess, is the most important business, most important metal for Hindalco after copper. So, quarter one, we are pleasantly happy that the cost was down 3% versus quarter four. And the reason was that we got a much higher amount of linkage coal. Some of it was in the NCL region, which is a more difficult area. So, linkage coal was around 63%, and we got the linkage coal. So, basically, costs of aluminium were down 6% versus quarter four. To the guidance, I think quarter two traditionally is our most difficult quarter for coal because it's the monsoon. He thinks that our costs will go up by about 3% in quarter two versus quarter one because of the monsoon and the coal impact. Also, the CP coke prices have gone a little higher. So, quarter one was a very pleasant surprise for them with the cost coming down by 3%. For quarter two, we'll go back to quarter four levels of pricing slash cost. So, quarter one costs came down 3% versus quarter four last year because of more coal, higher amount of linkage coal. Now, second quarter costs will probably be around quarter four costs of last year. Fine, fine, fine. Then the question comes, a new question. Could you provide the alumina sales volume in the quarter as well? So, alumina product, what were the sales? So, answer is the alumina sales in quarter one were 170 kilotons, and in quarter two should be more like 190 to 200 kilotons. So, guidance 190 to 200 kilotons worth of sales for alumina. All right, all right. So, this is a section on tariffs. Here, the management talks about the impact of tariffs on North American demand. North American demand. North America, very important market for Hindalco, especially Novelis. So he talks about the impact of tariffs on demand destruction in North America. I read. So demand destruction we have talked about in the overall consumer demand today. North America markets, the beverage packaging stayed strong. Beverage packaging stayed strong. We do continue to see a healthy auto business, especially with what we are selling into the larger vehicles. Ford had a very positive quarter itself, and our largest customer, Ford, had a very good quarter. The specialties market, like aerospace, I believe, kind of special and going sideways. Stable, sorry, a kind of stable. Specialties market seem to be stable. The auto market seems to be doing good. Beverage packaging also seems to be doing good. The demand is good there, despite the tariffs. That's a good thing. Moving on, we have, yes, question by by analyst on capex or the capital expenditure. Hindalco is investing a lot into its assets right now, asset expansion. The question is, and I read, okay, understood, sir. How should we look at capex increasing over the next 2 to 3 years? If you could just give some ballpark annual capex sense to us for the India business. So a ballpark, a kind of a range for capex over the next 2 to 3 years, only for India business. The guidance is this year they are about 7,500 crores, 8,000 crores, and next year it will be around 15,000 crores. The capex. The analyst asks, will fiscal year 2028 be the peak or somewhere higher for capex? So 15,000 crores next year capex. Okay. So the answer is, when will it peak? I don't think so. I think between fiscal year 27, 28, or 29, because we will try to make sure that we phase the capex a little bit. Because next year will be the peak because Aditya Refinery, the copper recycling business, would be largely complete. Then the first part of aluminium smelter expansion will be coming in. So the second smelter expansion and all that, which we have announced in our 50,000 crores investment, we will phase it a bit. Okay. So we are not ready we are not ready to give you exact numbers for 28, 29, but next year will be 15,000 crores. I believe this is for India business only. So next year will be 15,000 crores. Over the next 2, 3 years will be 50,000 crores of total capex. And they said that peak year should be the next year should be the peak for capex, at least next year. All right, all right. Then, then we have some important news on acquisitions. Hindalco recently acquired a company named Aluchem. Aluchem. The question is, and I read, I had a question on the acquisition of Aluchem. Can you give us some color on the EBITDA of this company last year? What is the scalability of the business? Because I understand specialty alumina is a high margin business. So some information on that acquisition. All right, all right. The answer is, so we bought this company. Which company? Aluchem. As we said, $125 million enterprise valuation. Enterprise value valuation of EV valuation of $125 million US dollars. And the EBITDA is roughly 25 million. So EV to EBITDA of around 5. But important, they made this acquisition more to get access to technology like tabular alumina, low soda, high purity, because these are the products that actually are imported into India. So this acquisition was made to get access to technology which is being imported into India. So, reading further, we want to bring the technology to India very quickly as well. So, if you remember from the April investor call, we are roughly selling 500,000 tons of specialty alumina, and we want to get about 1 million tons over the next 3 to 4 years. So, it's a part of broader strategy to sell more specialty alumina, but we need to get access to technology. Reading further. So we are actively looking to make technology acquisitions and as well. This was not really an acquisition to gain large volumes in the US, but more to gain access to technology that we can then deploy in India. So very simple. Aluchem was acquired mainly for tech, like high purity, low soda, tabular aluminum, stuff like that, which was previously had to be imported into India for production of specialty alumina. So to gain access to technology was the acquisition made, and EV to EBITDA valuation of 5 for this company. Then moving on. Now this is an important thing. This is for Novelis. Again, Novelis is a very important business for Hindalco. It contributes to around, I believe, $4 billion per quarter. Almost more than half, more than 50% of Hindalco's revenue comes from Novelis. So here management is talking about the EBITDA of Novelis for the future at least. I read, I think we have already indicated that we are bottoming out at this EBITDA level. This EBITDA level that they showcased in the first quarter for Novelis wasn't the best. You already know the reasons. Okay, the tariff impact and the higher scrap prices, but they believe they are bottoming out. This is the lowest of EBITDA they will reach for Novelis. Continuing to read, and this is despite all the headwinds that are coming at us, whether it is tariff, whether it is continued scrap situation, which is better but still elevated. Now he says, now what is specifically impacting us is the fact that the constrained capacities in the US. So in the US, there are constrained capacities. Capacities are constrained. Total production ability is constrained. So this is something important for you to understand. Us At this moment, we are capacity constrained in the US, which is forcing us to have more inter-region movement of products in a tariff regime. So that is what muting things. And that is exactly what we are working on right now, tariff mitigation actions. All right. Right now, the capacities in US are constrained. So they have to move products from one region to another. Because the higher tariffs, moving products from one region to another, they have to pay more tariffs. But even then, the guidance is that they're bottoming out at this EBITDA level. EBITDA should increase. Harry says, We are very confident about our execution, and from here, things will look up to the point about EBITDA bottoming out. Why? Again, we saw this earlier. Why will EBITDA be better? Because of better scrap spreads. What else was there? Better scrap spreads, cost reduction programs, better scrap spreads, and one more important point. Okay, okay. You can go back in the video and see it. All right, it's in the starting. All right, Novelis one, right? So the question comes by the shareholder. My second question is pertaining to copper, the copper business of Hindalco. Considering the crunch globally, can you help us understand by when we can get back to that surpass that 600 to 700 crores of EBITDA levels and go back to the 800 crores EBITDA level per quarter? So recently the EBITDA for the copper business was around 600-ish crores and earlier was 800 crores per quarter. So he's asking when will EBITDA level reach to 800 crores per quarter back again? Now, the answer is, so I think that it will be fair to say that TC slash RCs are going to remain quite subdued even next quarter because supply demand is not balanced. All right, let me explain this. ChatGPT, I asked from ChatGPT. TCs and RCs. TCs refer to treatment charges, RCs refer to refining charges. Hindalco's copper business is not digging up copper. They don't have copper mines or stuff like that. What they do is that copper mines sell them that raw copper and Hindalco refines it for them, only refines it for them. So for refining, they collect a TC, that is a treatment charge, that is treating that raw copper or that copper concentrate, treating that and then refining it. So TC, treatment charge, RC, refining charge. So he believes TCs, RCs are going to remain quite subdued even next year because supply demand is not balanced. Most probably supply is way more than demand. Continuing, but I think the way we are trying to mitigate that is by getting into copper scrap. We are putting 50 kilotons of copper scrap that will come online by December of next year. That 50 kilotons, then we will expand up to 200 kilotons in modules of 50. So that is one way we are going to get an increase in EBITDA of copper. They're trying to go for an increase in EBITDA for quarter by acquiring wood copper scrap. The second is that we are getting into more value added stuff. So even if we don't make much money from copper, TCRC, and copper cathodes, we're expanding downstream of copper to copper IGT, to copper foils, to copper alloy rods. So that is the more downstream of copper that gives us the additional EBITDA per ton coming in. DCs and RCs themselves, difficult to predict till more new mines come in. I think in the next few couple of years, they're going to remain subdued. Basically, they can't rely much more on just treatment and these refining of copper charges. So TCs, RCs, they predict for the next couple of years, they will be pretty subdued or low. But to increase EBITDA in the copper business, they're trying two things. One, bringing more copper scrap, bringing more copper scrap, increasing the volume of overall, I believe, treatment you can say of copper. So more volumes. Then second thing, other than volumes, is being more value added, getting into more value added products, like copper alloy rods, copper foils, copper IGT. I don't know what that means. So all that. Moving forward, we have just a couple more points. Very few points left. Question by analyst. This is more on the balance sheet. The question is, could you please repeat the India cash number? India cash number, how much cash they have in the India business, cash on hand basically. You mean how much cash we have in the treasury in India at least? So the answer is 18,000 crores is the total cash they have in the treasury, and net it is 11,000 crores. What does net mean? Now, 18,000 crores, they have total amount of cash in the treasury, all right? 18,000 crores for the India business. They have around 7,000 crores of debt, 7,000 crores of debt for India business. So 18,000 crores minus 17,000, so minus 7,000 crores gives us a net cash position, a net positive cash position of 11,000 crores for India position. Okay, okay. Long-term debt is around 7,000 odd crores and treasury total cash is around 18,000 crores. All right. The capex in India in the first quarter was 1,273 crores and for the full year is 7,500 to 8,000 crores. Wait, 7,500 to 8,000 crores is guidance for the full year in capex in India. And earlier they said 15,000 crores was the capex. Then that 15,000 crore earlier figure must have been total capex, like including Novelis. Because here they're saying the guidance is 7,500 to 8,000 crores. All right, so India must be 7,500, 8,000. Total must be about how much? 15,000. So that was it. That was all that's said in the con call. If there's more, you can read it. It's available online. You can just type in transcript for Hindalco's latest con call. So overall, what was said, they're getting into more value added stuff, higher margin, more profitable products like uh, battery enclosures. Yes, battery enclosures to EV manufacturers, battery enclosures, copper foils, copper IGT, copper alloy rods, get into more volumes, getting into more value added stuff. They believe that Novelis will do better in the subsequent quarters. So, yeah, that's it. Hope you have a nice day.